Okay, this is the problem. On 1/1/2004, TJ and Company Limited patents a new type of gas burner. TJ company are having the new type of gas burner, and that gas burner is issued to M&N Company, MN Company, MN and Company Limited for manufacture and sale of burner for 5 years on the following terms. Okay. So TJ company is the patenter. They are having the patent, and that patent is given to MN and Company. Okay, MN Company is a manufacturer. Manufacturer means lessee. Lessor is TJ and Company. Okay. Then MN Company pays royalty of ₹100 for every burner manufactured. For every burner manufactured, ₹100 the royalty. ₹100 royalty for every burner manufactured means you have to give consideration, or you must be very careful regarding this royalty, whether the rate of royalty is based on unit manufactured or unit sold. Okay. While taking the royalty in this type of problems, where the units and closing stock is given, in which problem they will give you closing stock. In that case, you have to be very careful about the rate of royalty. Whether the rate of royalty is on unit manufactured or unit sold. Okay. On the basis of that, you have to prepare the table regarding unit manufactured. If the rate of royalty is on unit manufactured, you have to prepare the table and ascertain the unit manufactured. If this rate of royalty is on sale, unit sold, rate of royalty is on unit sold, then you calculate, you open the table and ascertain the unit sold. I have solved 2-3 problems like this. Okay, here ₹100 royalty on manufacture, but manufactured unit is not given in the problem. Unit sales is here, sold units are given. Therefore, you have to calculate unit manufactured or output. Okay, ₹100 is the rate of royalty. Then minimum rent is 50,000, and MN Company is permitted to recover short workings, if any, in the next 2 years only. Next 2 years means floating period. Floating period is there, next 2 years. Payment is to be made on 31st every year. 31st December, payment is to be made. Sales and closing stock of 5 years is like this. 2004, 5, 6, 7, 8, 5 years period. Unit sold is given. Unit sold is given, closing stock is given, but unit manufactured is not given in the problem. Units manufactured is not given in the problem, and rate of royalty is on unit manufactured. Therefore, you have to calculate unit manufactured by drawing a table. And in this problem, pass the necessary journal entries in the books of TJ Company. TJ Company is the lessor. TJ Company is the lessor, and also show the necessary accounts. In the books of TJ Company Limited. And this problem is specifically taken by me to give a knowledge regarding accounting treatment in the books of lessor. This is the problem based on lessor. TJ and Company is the lessor, and how to write the journal entries in the books of lessor, and how to prepare the ledger accounts in the books of lessor. We can understand with this problem. Okay. And in the book, the question is different. In the book, question asked is different. I modified the question and taken for your convenience purpose. Okay, this is the only question I'll solve based on lesser, and this type of problems may come or may not come for your examination, but theoretical purpose I am taking this problem. Okay, first we calculate the unit manufactured. Statement showing unit manufactured. Date, year and date you write. This is the year and date you put. Then opening stock, closing stock, units sold. And unit produced, manufactured. Unit manufactured. Unit produced means manufactured. Okay. You write the given information. Unit sold is given for you 200, 400, 600, 550, 230. Units sold. Then closing stock first year is 50. Okay. This closing stock of first year becomes opening for the second year. Opening stock of first year is not given. There is no opening stock in the first year, and closing stock is 50. 50 is the closing stock. This closing stock 50 is the first year closing stock, becomes opening stock for second year. Okay. And second year closing stock is 100. This 100 closing stock of second year becomes opening stock for the third year. Okay. And third year closing stock 70 becomes opening stock for fourth year. And fourth year closing stock 150 becomes opening stock for fifth year. Okay. This, like this, you have to consider opening closing stock of previous year becomes opening stock for the current year. And fifth year closing stock is 20. This 20 closing stock will be opening stock for 2009. Okay, now you calculate the unit produced. Opening stock plus unit sold minus closing stock. It is 250. Unit produced. How to calculate the unit produced? Unit produced is to be calculated on the basis of closing stock plus unit produced, unit sold minus opening stock. Unit produced is to be calculated. Okay. So in the second year, it is 450. How it is 450? 400 plus 50 minus 50. Okay. Next, 570. 570. How I calculated? Just a minute, I'll make certain changes. You see here. You add closing stock and unit sold and deduct the opening stock. Minus, plus, plus. These two you add. Closing unit sold and closing stock you add and deduct the opening stock. 50 plus 200 is minus 0. 100 plus 400 minus 50. 70 plus 600 minus 100. 570. Then 150 plus 550 minus 70. 630. 20 plus 230 minus 150. It is 100. Like this, you calculate the unit produced. Okay, this is based on unit produced. Clear? Unit produced is equal to unit sold plus closing stock minus opening stock. And unit sold is required, then opening stock plus produced minus closing stock. That is the equation. There are two equations I already given for the calculation. Sometime royalty is based on unit produced and sometime royalty is based on unit sold. Sometime royalty is based on unit sold and sometime royalty is based on unit produced. Taking into consideration, you have to prepare this table. Clear? Now you prepare the royalty chart. Write the date. Unit produced is 250, 450, 570, 630, 100. This is the rate of royalty. Multiply the rate and output. This is the royalty by multiplication. Like this you multiply. Then minimum rent is 50,000, 50,000, 50,000, 50,000. There is no change because there is no strike. Royalty is calculated on the basis of output into rate. Minimum rent is here. Then excess. Excess is equal to royalty minus minimum rent. There is no excess. No excess in the second year. 7,000 is the excess in the third year. 13,000 is the excess in the fourth year. Last year no excess. Okay. Excess is calculated on the basis of royalty minus minimum rent. The next is short working. The short working is equal to minimum rent minus royalty. First year 20,000, 25,000 difference. Second year 5,000. Third year nil. Fourth year nil. Fifth year 40,000 is the difference. 40,000 is the short working. Okay. Next is SWR. For recovery of short working, next 2 years are given to you people. Okay. Next 2 years. So first year not possible, second year not possible, third year you can recover 5,000. You see the recovery point. You see the recovery point. M&A company is permitted to recover short working in the next year only. Next year only is there. I repeated this point. You see this. Short working is to be recovered in the next year only, means only 1 year time is given to you people. 1 year time is given to you people. Not this 25,000 is to be recovered in the next only 1 year. Only 1 year time is given, not 2 years. By oversight, I had told 2 years in previously. It is only 1 year time is given. Therefore, 25,000 is not recovered in the next year, and this will go to third column, recovery column. Okay, and 5,000. This 5,000 recovers in the next year. Okay, and in the recovery column, this 25,000 goes to the recovery column. You see here, 25,000 not recovered in the next year. Therefore, it goes to the recovery column, and 5,000 recovered in the next year because here is the excess. Okay. Then you calculate the payment. Payment is equal to royalty plus SW minus SWR. Okay. Royalty 57,000 plus 0 minus 5,000. 63,000 plus 0 minus 0. Then 10,000 plus 0. Sorry, plus 40,000 minus 0. 50,000. This is the royalty chart. In this problem, remember, my dear students, short working is to be recovered in the next year only. In the next year only means only 1 year period is given in the floating time. Clear? This is the table. Now we prepare the ledger accounts in the books of TJ Company. TJ and Company is the lesser. They are the lesser. Okay. This is in the books of lesser. This is royalty account. In the royalty account, debit side to lesser, credit side by P&L account. It is original form. Remember this. And you reverse it. Debit side to P&L account, credit side by lessee account. Instead of lesser, you write lessee name. In all the previous problems, you recorded as to lesser by P&L account. But here, to P&L account by lesser. You see here. In the reverse. To M&N Company, this is the lessee. Because account is in the books of lesser. Reverse order. I am writing in the reverse order. Same account. Same royalty account. Okay, 5 years completed. You see here. In all the previous problems, debit side is the name, credit side is the P&L account. But here, credit side, name of the lessee, credit side, debit side, P&L account. Only this is the change in the books of lesser. This is the royalty account. Amount, royalty column amount. But only change is debit side name comes on the credit side P&L account goes to debit side. This is the point you remember. And instead of lesser name, we take the lessee name. These words you remember regarding this account. Next, the M&N Company account. M&N Company means lessee, not the lesser. You have prepared the lesser account in previous problems. Here we are preparing lessee account. Okay. In the previous problems, you recorded in the debit side to bank account, credit side by royalty. It is your original form. But in this lesser book, debit side royalty, credit side by bank. Reverse order. Okay, I'll write here. You see, by bank to royalty. Change. Side change, service change. Okay. By bank comes on the credit side. Bank payment column amount comes credit side. Royalty and royalty column amount comes on the debit side. Close the account, write as difference short working, no doubt. Second year, by bank payment 50,000, to royalty account 45,000. Total 50,000, difference 5,000. Third year, by bank 52,000, to royalty 57,000, difference 5,000 by short working. Then third year, by bank 63,000, to royalty 63,000, total 63,000, no difference. Okay. Next year, by bank 50,000, to royalty 10,000, to short working 40,000, total 50,000. You see here. Credit side by bank, payment column amount. Debit side to royalty column amount. Difference short working, same. Okay. Here also there is a interchange. Debit side item, credit side item, debit side. It is the only change from lessee book to lesser book. Okay. You remember this. Next, short working account. In the short working account, this is also same. Debit side item, you write on the credit side item, debit side. And instead of lesser, you write the lessee name. This much you remember. Only thing you remember. You write the original, you remember original form. If they ask to prepare the accounts in the books of lesser, you have to modify the same account. Debit side items, you write on the credit side. Credit side items, you write on the debit side. And instead of lesser name, you write the lessee name. Okay, you see here. By M&N company account. By M&N company account, SW amount. This is in your original form, it is a debit side item. It comes on the credit side. Here you take the lesser name, but here I have taken the lessee name. It is the only change. Close the account and ascertain the balance because there is no amount in the SWR and the SWIR. Okay. Balance brought down is 25,000. Second year, again, SW is 5,000. Close the account, ascertain the balance. 25,000 is total. 30,000 is the total. Okay. Debit side by balance brought down by M&N company 5,000. This is SW amount. Okay. Close the account. Ascertain the balance. Balance is 5,000. Okay. This balance goes to next year. By balance brought down 5,000. Then in the third year, there is amount in the SWR column. SWR column goes to credit side. You write in the credit side. Okay, 5,000. Okay, close the account, ascertain the balance. Balance is nil. It is 5,000. It is 5,000. Again, there is 5,000. There is no balance for the third year. Fourth year, there is no balance. 2007, there is no balance. There is no short working. There is no SWR, SWIR, SW. No, 3 columns amount is not there. Therefore, I leave that year and takes the 2008, 31st 12 2008. M&N company is 40,000 SW column. 2 balance carried on 40,000. Total 40,000. Okay. 1/1/2009 balance brought on 40,000. Like this you write. Okay. You see this. How I calculated the accounts. Debit side items all recorded in the credit side. Okay. Credit side items recorded on the debit side. Original form. And amount also. Debit side amount, credit side amount, debit side. This much you remember. You make perfect the first method, lessee book, and remember these words for lesser book. Now you see the journal entries in the books of TJ Company Limited. TJ Company means lesser book. How the journal entries you have to pass in the books of lesser. Okay. I have taken this format for your convenience purpose because the table is not transparent in this slide. The table is not transparent for you people. Therefore, I have taken the part of the table. You don't write this table while writing the journal entry. Okay, first year, date, particular, LF, debit, credit. You write the date, first year, end date. You see here, in the first year, there is 25,000 SW. Okay, 25,000 SW. And the 3 entries, same entries you pass. And whatever you debited, you credit them, and credited is to be debited. You see here, I'll write the journal entry, adding this SW. This SW is to be added in the first entry. SWR, second, SWIR, third entry. Okay. If there is amount, you add short working. SW is to be added in the first entry. I will pass the entry. M&N company account, 2 short working, 2 royalty. Being minimum rent due, first entry. Second, bank account data to M&N company. Third entry, royalty account data to payable account. Being royalty transferred. These are the 3 entries in the books of lesser. In the lesser book, lessee name comes. Lessee name comes. Remember this. And in the lessee account, Whatever debited, that is to be credited. In the lessee book, royalty and short working debited, here credited. And name credited, it is debited. Here bank debited, there we credit. Okay. Royalty, credit, P&L account debit there. Okay. It is exactly opposite of lessee book entry. Debited is credited, credited is debited, and name is changed. Name also opposite party name. There we take lesser name, here we have to take lessee name. This is the point. Okay, MN company account debtor to royalty, royalty to short working added. Okay, so you put the amount 50,000 is the MN company, 25,000 royalty, 25,000 is short working. First, second payment 50,000. Okay, then royalty goes to a P&L account 25,000, 25,000. First year completed. Okay, total 1,25,000. I'll take this amount to the next column. Okay, this is the second year. Paid date particular amount. Then balance, brought forwarded amount is 1,25,000. 2005 is the date. I read the journal entry. You see here. Here also SW and SWIR column. Amounts are in SW and SWIR column. Therefore, short working is to be joined in the first entry and third entry. First entry and third entry. You see here. MN company account debtor royalty to short working. First, this 5,000. Second entry, only bank and name. Bank account debtor to MN company account. Third entry, royalty account debtor, short working account debtor to P&L account. Reverse order comes. Okay. Being royalty and short working transferred. Okay. Third entry, first entry, short working. Because here SWIR. Clear? Put the amount. Royalty, MN company 50,000, royalty 45,000, short working 5,000. 50,000 payment, 50,000 payment. This payment column. Then here, royalty 45,000, short working e-recovery column is 25,000. This is 25,000. Okay, total it is 70,000. Now you take the total. Total is 2,95,000. 2,95,000 is the total. And this goes to next page. Carry forwarded. Again, this is the table for the 2006. You see the journal entry. Brought forward amount is 2,95,000. SW no amount. SWIR 5,000. SWR 5,000. SWIR 0. So you have to join short working in the second entry. In the second entry, you join short working. Write the date. You see here. These are the journal entries. MN company account debtor to royalty account. First entry. There is no short working. Bank account debtor, short working account debtor to MN company. I joined short working here because SWR amount. You see the SWR amount is here. So short working is considered here in this stage. Okay. Royalty account debtor to P&L account. 3 entry completed. Record the amount. 57,000 is the total amount. Royalty is 57,000. 57,000 debit, 57,000 credit. Then 52,000 is the payment amount. Short working is 5,000. This is 5,000. Payment is 52,000. SWR 5,000. Total 57,000. Then royalty 57,000 goes to P&L account. Okay. Take the total. 4,66,000. This goes to next page. 2007. Brought forwarded 4,66,000 amount. In this columns you see SW0, SWR0, SWIR0. So short working including point will not arise. So there is no necessity of including short working. Simple royalty entry is 3. Royalty date, MN company account debtor to royalty, being royalty or bank account debtor to MN company account, royalty account debtor to P&L account. You see here, there is no short working. Okay. You put the amount. Royalty 63,000. Then MN company 63,000. Bank 63,000. Payment 63,000. MN company. Royalty 63,000 goes to P&L account. This is the way. This is the way of writing this. Third year. Total is 6,55,000. Okay. Goes to next page. US page total is 6,55,000. 2008. You see here. Here is SW. This amount comes in the first entry. In the first entry comes second entry, no SW. Third entry, no SW. Okay. MN company account debtor, to royalty, to short working. Don't write as DR. Okay. Don't write the DR. Being minimum rent earned. Second entry, bank account debtor to MN company account. Third entry, royalty account debtor to P&L account. You put the amount 50,000 total. Out of that 10,000 royalty, 40,000 short working. Total 50,000. Okay. Short working 40,000. Second year payment 50,000. 10,000 royalty goes to P&L account. Then last it is total. Okay. Total. This is the last year. You write here as a total, not carry down. Brought forward or carry forward. Don't write as carry forward. You write as a total. At the end, you have to write the total. Like this, you pass the journal entry. Okay. In the original form, whatever debited, that is to be credited here. And credited item, debit. But in the opposite name. Lesser name comes in the lessee book. Lessee name comes in the lesser book. This is the point you remember. This is the journal entries. Okay. This is the important problem based on lesser. And you make this problem perfect regarding lesser book. Okay. I'll not go for solving other problems. Only one problem I solved based on lesser. You make this problem perfect and remember. Okay. Thank you.